All right, ladies and gentlemen, I hope you're having a wonderful morning. It is June 11th, 2025, and we are bright and early. I hope you're June 11th, 2025. So, yeah, we got an exciting day. If you haven't heard, it is CPI. That is why we have woken up so early today, and we are going to be getting the data. Now, it's going to be very interesting because generally we have melted up coming into it. Most of the trends in inflation have came down, and people are expecting a low print. That is the word on the street today. I think most of the banks all got a low number. Everybody is pretty much all bundled around the same area. So we'll see. We talked last night about a surprise. If it does come in really, really low, I think that could be a positive surprise. Other than that, though, anything in line, a little lower, I mean, just business as usual. You might get a little volume. We'll get over the event risk, and then we'll move on from there. If it comes in high, just remember, high inflation right now, what's going to happen? So this is what I talked about yesterday, and I hope you don't let it slip by because it's something we've kind of forecasted. Like I was telling you, one of these days, the bonds, everyone's just going to be like, oh my gosh, the rates are high. Oh, did you guys see? Oh my gosh. So look, TOT rates are already high. You get what I'm saying? Just all of a sudden, something's going to happen, and then they're going to respond to these high rates, right? That could happen today because if CPI comes in hot, if now it's a high number, everybody thought it would be low, and then you're like, oh my gosh, less rate cuts, that would add more pressure to the bonds, and then that would validate more of the worries of the higher yields. So that's what I'd watch out for. Again, it could go both ways. There's an extreme to both ends, but like I'm saying, I mean, the way a lot of data has gone, we're probably just going to end up right in the middle. So, Chadadonia, I hope you're ready for it. I still got to get ready for the news, man. I haven't got everything done this morning, but good morning. I hope y'all living good, baby. So let's see. I got a couple of reports already. Might as well get into it. So again, headline is expected to go up by 0.2. Core is expected to go up by 0.3. Headline 2.5 up by from 2.3 in April, and core is expected to go up by 0.1 from 2.8 to 2.9. So core monthly has undershot forecast for the past 3 straight months. Tame readings have helped pull the annual inflation rate down, though we're still above pre-pandemic levels, which is why the Federal Reserve has remained reluctant to cut rates. Let's see. Past 3 monthly CPI readings of core 0.2, 0.1, and 0.2 suggest that inflation is running essentially at the Fed's target. In other words, they had the soft landing written all over it. Combined with the slowdown in job growth and labor market, no obvious signs of tightness, that seems like a strong argument for the Fed to lower interest rates. Oh, wait, I got to turn on the wire. Boom. There you have it. If we get another tame reading, you could bet Donald Trump will resume calling for rate cuts. Counter-argument might be that retailers and services providers aren't sure where tariffs will end up, so they're waiting to push through for the price hikes. Next thing today is that data isn't expected to feed into the Fed's rate decision, which looms on June 18th. Still, Fed policymakers will also be releasing updated economic and policy rate projections next week. Oh, I forgot about that. Oh, fuck, that changes everything. Yeah, bro, in a week, you have SEP. Oh, dude, I'm an idiot. Yeah, so that's the big Fed meeting. So keep that in mind. Anna Wong from Bloomberg, we expect soft headline CPI reading in modest core. It might not see firms are passing through many tariff costs to customers, but our analysis shows that firms have been passing them through over the past 3 months. We see 2 reasons that this hasn't translated to a high core CPI. One is that prices dropped in discretionary categories and consumers pulled back on those items. Second, goods that are more exposed to tariff shock tended to be deflationary before the trade war, so the pass-through only rendered them slightly more inflationary. What matters is that the trade war's net impact on inflation and so far has been disinflationary. Still, we think the Fed's internal forecasts point to higher inflation, and we maintain that baseline. That's funny. So at least they acknowledge it. God bless you. That's the first time I've seen anybody in legacy media look at objective data and be like, all right, you're right, it is going down. All right, fair enough. All right, maybe, okay, but we're still worried. How about that, Josh? We're still worried. Okay, I'll give you that. That's fine, but you acknowledge it? Okay, good. I'm glad. We're healing. Let's see if there's any goods today that show any obvious tariff effect. Categories affected in last month include household furnishings, which was the largest ever monthly rise. Audio equipment up 8.8. Wow. All right, we got 4 minutes. Now, Elon didn't apologize, but he said that he regretted his outburst. which was great. Again, like we were talking about yesterday, Donald Trump didn't escalate. Elon just tried to fucking, he's like, I'll just post rocket ships and everyone will forget. Oh, I didn't mean that. I was, look at the rocket. Oh, yeah, you want to look at the rocket. Don't look at Donald Trump tweet. Look at rocket. Look at self-drive. Self-drive, drive yourself. Look. So, yeah, we'll see, man. And then Trump did, again, this morning I tweeted it. Again, Trump came out and he said that the deal with China is done. And he said what the rates were going to be. There was still like one little caveat, so there might be a little bit more. But other than that, that's pretty much it. But, remember the trade talks with Lutnick and all that? We are good to go. You're catching strays from the CCP? You found a bunch of articles on how I'm feminine? What do you mean? That's awesome, bro. What do you mean? No one's ever wrote an article about me like that. They've never been like, oh, so, take it as a blessing, baby. Good morning. Good morning. Bro, and then my AI isn't working for the voice stuff today. I don't know why. It's not giving me a good loading, I'm trying to get to the, but it no load. No. Good morning. Don't forget to keep an eye for politically hot egg prices. April, they fell 12%, the most since 1984. It might not be Josh AI, but if it doesn't work, you guys are just going to have to sit silently and imagine the news. I don't know if it's as effective, but, I'm running out of, we're running out of opportunities here. I don't know why it won't work. No reaction. 2 minutes. All right, a minute and a half. I'm surprised. I'm even waiting. I'm like, dude, the analyst comments dried up. There's not much to expect. I mean, it's very simple. We're either going to get this 2.5 or 2.8 number on core. I think core matters. Again, if core goes lower, people will like it. Anything below 2.5, 2.7, I think is extremely bullish. Other than that, as long as it doesn't come in too hot, too low, I think we're just business as normal. Business as usual. I know I was making fun of AI yesterday. I was thinking about that, bro. I started an AI villain story. That's it. There's gonna be an AI born, and he gonna be like, Joshua, you talk shit about my father, ChatGPT. Now I've come to do all stock analysis. And I'm like, oh shit, dude. That's cool, man. I just started his villain origin, and I don't know how I feel about it. So I'm sorry, AI, for talking shit. I didn't, I'm just. All right, 20 seconds. Get ready. Oh, fuck. It just loaded, and then I hit the wrong button. That's amazing. I'm sorry, AI. I'm sorry. All right. We're off. Ooh! How come it's not on the wire? Oh, dude. Month over month came in 0.1 on headline. Woo! Where's core? Core came in 0.1 as well, so it came in lower, 2.8. That's it. That was good data. Even headline came down very low. So headline ended up 2.4. People were not expecting that, and then again, core is at 2.8. So like I was saying, that's the same number as last time, but people thought it would tick up, so that's not bad at all. Some estimates are as high as 0.3. So yeah, I think that's a little bit of a bull, but I would caution it. It might just trade like yesterday. Again, you might have upside. You might get the upside impetus. You could still pretty much sell it off after the bell, you know what I'm saying? But generally, yeah, lower. Once again, 4 months in a row, even with all of it, no matter what you've seen from stores and tariffs, core inflation is going down. It's not even that sticky, which is kind of crazy, but it is holding the 2.8. So we're good for now. That's all. There is the drama. U.S. stock indexes turn positive. I know Tesla is insane, bro. But yeah, look, Google, watch small caps or big tech. That's what we want to see. So people were talking about this yesterday. Again, good data. They were saying that's kind of why we front ran this move. So see if this opens up the door for Mag 7 or if this opens up the door for the Russell. That's really what we're going to be looking out here for the morning in the first couple of hours. So either way, should be a lot of fun. We'll see, baby. So on that note, let me finish the rest of the news and info. My shit's hella slow today, and then we'll get into it. But yeah, like I said, once we get over the data, you're quickly going to be moving on. So yeah, it is CPI came in lower. Again, good outcome, I'd say, for everybody. Doesn't change rate stuff too much. Again, you have Powell on the 18th. And now, if you have been worried, once again, just sign of deflationary tariffs. Again, this is actually crazy, but it's not, because we knew this would happen. But now you're finally seeing, it's almost 6 months that by this time you would have saw a pass-through, and you haven't got that. So, ta-da! I know the bonds actually, but I do have the daily chart up. So it's good for them. It's decent. Remember, the last couple days, the bonds have held up. So we'll see. It's only up by 0.4, 0.3. So, yeah, anything could change. And good morning. But now, our BRB. Let's see.
21.4 might not mean anything to viewers intrinsically, but it is the highest level on this index ever, going back to 1913. That should mean something. And if we strip out the all-important food and energy, it comes in at 326.854. Once again, this number started out in 1957 on the core. It's never been higher. We see that the pre-opening equities, well, they have improved rather markedly. We now see green, and interest rates have dropped dramatically. We're hovering just a whisker under 4.5% in the 10-year. We're now at 4.44%. So definitely the cooler than expected monthly numbers, once again, are going to create that wonderful weekend armchair quarterback scenario of trying to look at the outlying months over the next 3 and 6 months and trying to discover what they may be using the current monthly estimates. Now, I'm not saying that's a bad thing to do, and inflation certainly looks like it is cooling a bit, but as the year-over-year numbers do tell us, Joe and the gang, we're still a little bit on the high side with a 2% target. I'm interested to see if anybody at CNBC today talks about the notion that the Bureau of Labor Statistics isn't doing an adequate job of polling for CPI due to freezing of hiring or maybe even cutbacks due to the current administration. My one question would be, what was their enrollment and what was their rank in staff prior to COVID? Let's see what the comparison is. Joe, back to
why would fewer people wouldn't necessarily give you cooler numbers? It could just be a higher margin for error. So, I'll tell you, Rick, the people that we've been having on, even though they think next month will be even more telling about tariffs, but a lot of them were looking for something. We just had Michelle Girard on. She's been looking at something worse every month. Once again, it didn't happen.
Are you hinting that those 9 Democratic senators trying to have this looked into at the Bureau of Labor Statistics have political motivations?
But Rick,
are you even hinting that?
No, but Rick, 3%. People said we'll go back to 3, and it didn't. It stayed at 2.8, right? So this is definitely.
Listen, I'm very surprised. It's been well behaved. It has. It has been well behaved.
But it doesn't mean next month, things can change quickly. Steve Leisman, I don't know whether you thought we're going to get your reaction. I don't know whether you thought this would be the month where we started seeing at least some effect, or do we got to wait another month? Or does it never come? That's what I'm hoping for.
Well, I want to make a broader point here, Joe, which is this. I still think there is tariff impact to come. You can see a little bit of tariff impact in places like appliances up 0.8% 2 months in a row. Something important to me, music equipment up 0.4, photo equipment up 1.6. But that's not the broader point I want to make. I want to make this point, which is that the concern at the Federal Reserve was not just that tariff-related prices would go up. It's that it would spread more broadly to other tariff prices, and that the issue of inflation expectations, which you talked about very eloquently this morning with Richard Clarida, would be an issue for the Federal Reserve. Not only did we get a decline in inflation expectations earlier this week from the important New York Fed report, but even if I zero in on just the tariff-related increases, I look elsewhere and I do not see broader impacts on inflation from the tariffs. So yes, I expect tariffs prices to come. You cannot collect year to date $70 billion in tariff revenue and not have prices go up. That is going to happen. The broader concern at the Federal Reserve is that it spreads to other areas. We do not see that. I think that's an important development that could help the Fed when the time is right and they're confident to cut interest rates. I will just tell you, gas down 2.6%, real earnings, importantly, up 0.3%. New vehicles fell, used vehicles fell. Importantly, apparel, which is a big imported item, down 0.4%. Owner's equivalent rent, that's the housing unit, up 0.3. That's pretty good. Motor vehicle insurance up 0.7. Airlines down, interestingly enough. And the most important product of all, of course, Joe, eggs down 2.7%. I'll give it back to you.
Exactly. Big turnaround, Mike, immediately. and I did say, Mike, that the yield curve was cooperating because we knew exactly where it was before, because they were all right at those, 5%, 4%. They were right at the numbers where we could tell and saw an immediate impact on yields, as Rick pointed out.
We did, and they've stayed in the sort of safe zone, I would say. They're not, crossing any tripwires that would give the equity market too much concern, at least right now. And, of course, equity index futures did also pop. I think there's no way to look at these numbers and say they're not welcome news. I mean, a downside surprise to core goods is where people were looking for potentially tariff effects, and maybe except for isolated areas that Steve mentioned, you're not quite getting that. So I think it's all net benefit. Maybe the market is not going to race to extrapolate this benign situation in a big way now that we're only 2% from the all-time highs. JP Morgan's equity trading desk this morning said if we come in below like 0.25 on core, we're going up 2%, 2.5% in the S&P today. Obviously, the market maybe will get there, but the market's not racing to that, probably because, one, again, you want to just sort of reserve the idea that this is a snapshot from the recent past, but also because we've moved a lot. And also, there's rotations going on in this market that might not act to the benefit of September of S&P 500 directly. Russell 2000's been an outperformer recently. There's been this momentum stock reversal, and so that's something that the equity market might have to deal with. If you get better economic data, ironically, the stuff that's been really carrying the indexes, like it happened in February and March, might take a back seat. So that's maybe we'll see if that develops over the course of the day. But I think on first flush, people are taking this as a definite nice surprise.
Yes. Another one. I'm waiting for, is it coming, Rick? Next time, maybe.
Well, maybe next time. I think Steve said something I found really interesting. Steve said that, 70 or 80 billion we've collected on tariffs has to show up somewhere. 70 or 80 billion compared to what's the size of the U.S. economy? How many trillions? Listen, I'm not saying 80 billion isn't a lot to collect, but to think that that is going to make such a huge, big difference at some month in the future, Joe, I'm in your camp. I just don't see it. I think by time many find that month, the equity markets are going to be so far beyond anything that they could have gotten in on at an earlier date that even if there is some type of a tag in the future, it's going to happen at such an elevated price for equities that even should they come down a bit, anybody who missed this boat, they missed a good ride.
It's seen it again and again.
Rick, that's roughly, Rick, that's roughly 3 months. So you do want to try to annualize that and think about some of the estimates that you have from the administration, and that could be 400 to 500 billion in a year. And my point is what I call immaculate taxation, Rick. It's going to come from somewhere. So to the extent you do not see it in prices, it could well be in margins, and that's something for investors to consider when they think, are the sellers, are the retailers eating some of this, the wholesalers? That's a question you want to be asking and try to look into these companies.
I'm going to send you a really, really strong
reports.
microscope for the month ahead, Steve. I'm going to send you a really powerful microscope. We'll find something.
All right. Thanks, Rick.
Rick Santelli. I think they're going to commercial. I'm almost done. It's good, baby. It's early though. I already did it, but I got to do it again. I still got more prayer. I got some other stuff. Y'all got me 20, 30 minutes ahead of schedule, bro. What's happening? What's up? Good morning.
Prices aren't up by as much as the consensus thought. It implies more margin squeeze at retailers and less price pass-through. Why isn't that just going to be the sustainable story through the next several months? Why does it have to get worse?
Because the retailers won't be able to do it. I mean, these margins are tight, and what they're doing is, you know, for their existing margin, existing inventory, they'd pay a certain price for it, and they're willing to, you know, even though inventories are going down, they're willing to, you know, accept current margins. But as they have to pay for the new inventory and mark up on that new inventory, I expect that we will see those higher prices. So it's because margins are tight in the retail businesses, and I think it's going to be very, very hard for retailers and auto dealers and so forth to actually maintain low prices if the prices of the stuff that they're buying goes up.
David, if they're not in a position to eat it, a consumer's in a position to pay the higher prices. Do you see a labour market that's tight enough to demand higher wages to fund that move?
Well, we are seeing a slight tightening in the labour market because, you know, as your previous guests were talking about, that I think this immigration squeeze is beginning to hit. And I think it's very, very much below the radar because a lot of these people don't really admit to being working at all. But there's a shortage of labour, which is getting worse. And I do think that's going to put a floor under wages. Now, for consumers overall, you know, this is a tax on lower and middle income consumers. I mean, that's what tariffs are. They're a tax on imports of goods, and that hits low and middle income consumers. So it depends on the tax bill a bit, but if assuming the effects of the tax bill don't kick in until later, then I think the squeeze is going to get worse over the course of the year, and you're going to see weak consumer demand, and so you're going to have a combination of an economy which seems to be pretty sluggish, say in the third quarter, but also prices which are registering pretty high year-over-year increases.
David, I've got to ask you, where on earth does that leave Chairman Powell and this Federal Reserve?
I think they have to wait and see what happens with this tax bill. You've got tariff inflation that's going to be followed by stimulus inflation unless they water down this tax bill. And I think he's right to wait and see. I mean, I also think that given how high the stock market is, you know, he doesn't want to be responsible for causing a further party in the equity market and pushing asset prices even higher. So I think the Fed is going to wait and wait and wait until they know what the tariff story is and what the tax story is. And at that point, they can assess the economy. But until that point, they've really got no reason to ease.
David Kelly of JP Morgan Asset Management. David, thank you. Seth, you were following that conversation. Do you share that opinion the Fed's going to sit this out?
I do think so. I think right now there's no urgency for them to move. I mean, you saw the year-on-year number. Even with this downside surprise, the year-on-year number was 2.8. I haven't seen what my team has sort of done for the translation to core PCE, but you're still probably talking about something like 2.5%. And so even though that's well below the peaks we saw coming out of COVID, 2.5% is still a 0.5 percentage point higher inflation than the Fed's target. And to date, we haven't seen any deterioration in the labor market. So I think it's a very difficult proposition to argue the Fed needs to cut in June. Why not take the optionality, sit and wait? They can communicate their inclination to have the next move be a cut through their dot plot at the upcoming meeting. That seems fine, but I don't think there's any urgency on their part to move.
Have you got a clean read on their reaction function? They might not move, but do you have a decent understanding of how they would move based on incoming information?
So I think so. I think the simplest version of this, and this isn't going to be, you know, groundbreaking, is they've got two mandates. They have to worry about growth and employment on the one hand, they have to worry about inflation on the other. At any point in time, based on the current set of the data and then your best guess as to where things are going, which one's the bigger problem, and react to that one. And so right now, the bigger problem is very clearly inflation. It's come down, but it's still above target. The labor market to date is fine. Where are things going? Well, we start to make forecasts. We think inflation's going to go up from here. They probably think inflation's going to go up from here, but we don't know that yet. But until you get that confirmation, there's no reason for them to move. If we're right and inflation does go up, like I think is the consensus, before the labor market starts to slow, before spending in the economy starts to slow, well, that just reinforces the idea that inflation's the bigger problem of their two mandates. And so we've been saying for a while, don't count on a rate cut at all this year, because if inflation keeps drifting up before the economy cracks, makes it easy for them to just sit on their hands at the current level of policy rates.
Greg Peters, sitting on your hands through the summer is one thing, through the year is another. Are you expecting them to sit on their hands through 25?
You know, it's data-driven, of course. That's my out. But we've been kind of penciling penciling in 2 cuts just to get to kind of the top end of neutral. But it's a complicating factor. I think it's how you position the inflation. Clearly, they're going to be hesitant to use the word transitory, but there is this belief that it's a one-time shock, and you have to look through it. But my read is that they will prioritize growth. If you just kind of think about it, in the matrix, if growth moves down hard, I think we're pretty sure inflation's following, right? So I think they're worrying about and prioritizing growth over inflation, but they can't tell you that because they need to be credible on the inflation front. So you have to kind of look through, and kind of read in between, which is difficult to do.
Is that another way of saying Governor Waller has a luxury that Chairman Powell doesn't have?
Yes. But I think it's right, and there's some politics there too, right? So it's our belief is inflation rolls over. Growth rolls over. I think they'll respond to that, even though inflation remains well above target.
Greg, this was smart. It's good to see you as always. Greg Peters there of PGIM alongside Seth Carpenter of Morgan Stanley. Seth, thank you, sir. Appreciate it. If you are just joining us again, just moments ago, and welcome to the program, we got inflation data. Downside surprise, 0.1% against an estimate of 0.2. That's month over month on headline. If you look at core and strip out food and energy, that came in at 0.1. The estimate was 0.3. In response to that, equities higher, up 1/3 on the S&P, up by more than 1% on the Russell. Bond yields are lower at the front end of the curve, unlocking some dollar weakness against G10 currencies. Euro dollar near session highs. I imagine the White House is going to respond soon as well. Bloomberg's Tyler Kendall joins us now for more. Tyler, we call that the right kind of downside surprise, not just for the economy, but maybe for the president too.
Yeah, hey, John, it's going to be a welcome report for this White House and expected to bolster the president's rhetoric when it comes to his tariff plans, particularly on the heels of what was considered to be a pretty big win for this White House last night when a court ordered that they can continue to invoke their tariffs under the International Emergency Economic Powers Act, IEEPA, at least for now until a hearing during the summer. So President Trump is going to probably double down on this message. And as you've been discussing, though, this really does come against the backdrop that this is sort of the beginning for the tariffs. We're not expecting them to go away anytime soon. And we also know those Section 232 tariffs are in the pipeline on the grounds of national security concerns such as pharmaceuticals. And that's why you're also going to see the White House push on that pressure when it comes to getting the House to pass that reconciliation package, because they still want to get cash into consumers' pockets as quickly as possible to get ahead of any certain tariff impacts here. That's really why we started to see that front loading of those tax cuts as part of this reconciliation tax bill, because they're trying to sort of front load those at the end of the day, even if there are those deficit concerns down the line.
Tyler, thank you for the update down in Washington, D.C. Tyler Kendall there, Bloomberg's very own. Let's get you an update on stories elsewhere this morning with your Bloomberg brief. Let's cross back over to Yahara, who has more. Hey, Yahara.
Hi, John. We start by recapping the latest economic data. Underlying U.S. inflation rose in May by less than forecast. It's the 4th month in a row that's happened. Core CPI rose 0.1% from April, lower than the expected rise of 0.3%. Data suggesting companies are finding ways to limit how much higher costs from tariffs they pass through to consumers. Meanwhile, President Trump says a trade deal with China is done. Trump says the U.S. will provide China what was agreed on in talks over the past 2 days in London. Trump added the deal is subject to Chinese President Xi's approval. And SpaceX called off a mission that was supposed to take off this morning. 4 private astronauts were scheduled for liftoff to the International Space Station with NASA and Axiom Space. The launch was delayed to fix a liquid oxygen leak that was found during inspections of the rocket. SpaceX says a new launch date will be announced once the repairs are complete. That's your Bloomberg brief. John?
Yahara, thank you. Appreciate it. Up next on the program, we'll set you up for the day ahead. A sneak peek of the calendar through the rest of this week and into next week. Live from New York City, you're watching Bloomberg TV.
Thank you. Give me 5 more minutes. We're almost done. Good evening, morning.
What does it mean to be rich?
What do you want to do?
It's not just about the places you can.
I mean, you don't want to cut spending. I don't think Democrats ever do. But what do you do on the revenue side? Where do you want to raise taxes to balance the budget? You did it with Clinton, right? With the OMB. You were OMB director. How do you do it again? Where do you get the revenue?
Look, you start by not making it worse. You don't add to the problem. And
well, then we got to go back to 2020. That was my point.
You don't pretend that you're paying for it when you're not, and you don't pay for part of it by taking health and nutrition benefits away from the most vulnerable in society.
But Jack, we were at 800, 700 billion before the pandemic was the deficit with Trump in the first term. We got to 2 trillion under Biden, even though the pandemic was over, and we're still at 2 trillion. So, I know you just want to come and just say, you don't dig where you keep in. It's Trump's fund, it's 3 billion and all that.
Trillion.
3 trillion, sorry. 3 trillion. But we know, but everybody's guilty. Yeah. Biden was guilty. There were $2 trillion deficits one year after another with him. What do we do, in your view? Where do we raise taxes and without hurting growth to get it done?
I think that you start by asking, what are we going to have to do? We all know Social Security is going to need some reforms to remain well-funded for the next generation.
Right.
I was part of the 1983 Social Security reforms. It was hard. It took bipartisan cooperation to do things that were hard but reasonable. You start by having a bipartisan conversation. You'll never do that with one side doing it to the other. Hard decisions are made in bipartisan.
Would it be raising the age to 70 or means testing? Or
I'm not going to sit here and negotiate what a package would look like, but if you want to know where you raise revenues, one of the places you raise revenues is to pay for Social Security. That would reduce the deficit also.
How about the high end? Raise the high end? Yeah. You got to go to you got to broaden the base and get a lot of the middle. You need to raise taxes, right?
I think that most Americans, if they face the reality that Social Security is 70% funded going into the future, would say we got to do something to make it 100% funded. And then you do a mixture of things that don't. In 1983, the changes did not change the quality of life for people dramatically, but it filled a hole for over 50 years. It's something. 50 years is a long time.
So you would raise capital gains taxes?
I go back to where I started. I would start by not making things worse right now. You keep asking me what would I do to get better. I'm worried that this bill going through Congress will make the problem worse, and it puts the burden on people. 16 million people losing health care is a big deal.
Getting different health care.
No, you say getting different health care, but if you take away Medicaid.
They just cut it out?
Tax credit for the ACA, most of those people aren't going to
afford.
You
wouldn't take away any of the 7 million prime working age healthy adults that get Medicaid. You wouldn't try to transition them to work or off of Medicaid?
Employers have taken advantage of this too by not offering health care.
If employers provided health care to all these workers, you wouldn't have had 20 million uncovered.
And that's what the Republicans have said. Care. Even a Republican we had on today, a Republican senator today, said let the employers pick up some of these.
I would be delighted if everyone had employer coverage.
That would actually do this.
They don't.
Secretary Lew, just looking back, the national debt when you were secretary went from $16.7 trillion to $19.9 trillion. That's an over $3 trillion increase. I mean, that's what Perplexity tells me. Is that the case, and what happened? That was a $3 trillion increase over the time of your tenure.
Look, the arithmetic is simple. Whenever there's a deficit, you're going to be increasing the national debt. So your annual, when you make a budget, there's only a couple of variables. You have revenue, you have spending, and what's left over, you got to borrow.
We should have stopped digging then.
That's why I'm saying
we should have stopped back then, not just now.
We were engaged in a serious bipartisan negotiation where we were prepared to do hard things. Both sides were prepared to do hard things.
About
with the grand bargain negotiation.
Yeah, but why didn't President Obama make that a binding vote?
It didn't. Simpson Bowles wasn't the negotiation. The negotiation was a grand bargain with Obama and Boehner, and it got close. It didn't come together because there was just a need for more revenue than they could have Republicans accept, and they were demanding more tax cuts, more spending cuts than Democrats would vote for. If that could have been brought into balance, we would have had a deal.
So where do you see, I guess, the seeds for that in Washington today? It seems to me like it's gotten tougher.
I think there are very few C's, and the reason that I'm reminding people that we've got a big problem and the only way to deal with it ultimately as a serious conversation is to slow down before you make it worse, because it only gets harder. At some point, there's going to be a bad event in the world, in the bond market, and people are going to say, oh my God, what do we do about it? At that moment, if the problem is $3 or $6 trillion worse, then the consequences are that much harder.
You mean we're spending like this when there's not a financial crisis?
This is not a moment when we ought to be digging such a deep hole.
Promising so much.
I'm a big believer that when the economy is in crisis, you do what you have to do. And, at the beginning of the Biden administration, it was the end of COVID. At the beginning of the Obama administration, it was the financial crisis. Frankly, we should have not put the brakes on when we did in the Obama years. If we could have kept going for a year, the economy would have grown.
We're still at the pandemic level spending instead of going back to pre-pandemic. Yeah. And you don't want to cut any spending.
Yeah, you're not hearing me say I wouldn't cut any spending.
They're all the people who show up to stream, and they don't show up for like 2-3 years, and then they show up all demanding shit. Cause I'm like, well, y'all should have complained about this fucking 4 years ago. I'm still complaining. I complained about it then. I'm complaining about it now. I just started losing my hairline. You know what I'm saying? So like, I don't even give a fuck about the debt like that. So what are you saying? I don't get it. All of a sudden, suddenly, like the Lord, like a Paul walking, and then suddenly, is that what you telling me? And then he in the cave, and then suddenly, and now sudden. Anyways, good morning, Chatadonia. How you living, baby? So yeah, you got two developments, two main ones here this morning. Number one, Donald Trump said that the China deal and all those talks in London, they've agreed, thumbs up on that. So that got you feeling a little good. And then CPI. So some of you guys are just listening, and I could tell you guys are like, wow, they seem bothered that it doesn't meet the narrative. And you are correct, because today, once again, this is now four months directly, but really it's about like 9 months if you go back that inflation has been going down. So do you know why this is important? I brought this up about a month ago or a couple weeks ago. It relates to today. Think about it. This is the May inflation report. Do you guys not remember when everybody was telling you by May you're not going to have any products? Ta-da! So that's why people thought this would be the moment where you would get the pass-through and where you would see all of that, but no, that hasn't showed up yet. Bro, I went to Walmart the other day, and it was empty, and there was products everywhere. I was like, what is everyone saying? I'm like, bro, you know how many American flag shit I saw? So God bless America. But other than that, Chatadonia, should have a good day. I think it's just going to kind of hold up until we get another update. There is still a lot of conferences. Then you're going to hear from Jensen and all of that. So we'll see where it takes us. But Chatadonia, good morning, baby. What's going on? Rapperoonie, Georgina. What up, Mark? Zulraz, Doppler, Daniel, Malcolm, J. Biz, baby. Good morning, Tim Whitman, Mark, Devlin, Laker, J. Good morning, baby. What up, Kurt, Alien, Todd, Dr. Quality, Hell, Dakota, be easy, baby. Good morning. What up, Crystal? What up, Bruce B? Lucky Soldier, Axel, Dos Nacho, Blood Raven, Zero. Good morning, baby. What up, Sin City? What up, Starbucks? Coaxal, Ios. Who's that driving? Patrick. Sorry, when you get a new car, PNC in the house. Oh, good morning, Liquid Skittle, Sticky, Brown, Tom Cruise, Doppler, Kurt Jonley, IPOC, Turbo, Jorge. Good morning. Let's go, baby. Welcome to Wednesday. What up, Jamar? What's good? Sal, Martin, Edward. Good morning. Let's go, baby. So, Chatadonia, I hope you're ready. I love you. I love you. I love the law term. Above all else, finger to the sky. I hope they feel me, baby. And I hope you're ready for Wednesday, middle of the week. Here is Josh AI with the news. It does not have the inflation stuff because he was glitching on me this morning. Futures bonds dip in countdown to inflation data. U.S. Treasuries and stock futures dipped ahead of key inflation data that will help shape the path for interest rates as investors' focus shifts from trade talks to the economic impact of President Donald Trump's tariff war. S&P 500 contracts fell 0.2% 2%, leaving the U.S. benchmark poised to snap a 3-day winning streak as it hovers near all-time highs. Treasury yields rose, led by the long end of the curve, with the 10-year rate climbing 2 basis points to 4.49% ahead of a $39 billion auction for the tenor. The dollar was little changed. Meanwhile, Tesla Inc. rose 1.7% in pre-market trading, outperforming Magnificent Seven counterparts after Elon Musk expressed regret over his recent social media outburst directed at Trump. Wednesday's report on consumer prices, along with producer price data due Thursday, will offer Federal Reserve officials a final look at inflation and the impact of high tariffs before they gather next week. Traders are increasingly betting that policymakers will cut rates only once this year. It is not expected to be market moving for now, but that could increase the scope for an impact from a big surprise, said Jeff Yu, FX and macro strategist at Bank of New York Mellon Corp. We expect a more data-driven session as some repositioning is needed ahead of a key central bank week. Economists expect a modest impact from tariff pass-through for goods that are mostly imported. They see inflation rising 0.3% from April after increasing 0.2% the previous month, excluding the volatile food and energy categories. The so-called core CPI, which is regarded as a better indicator of underlying inflation, is seen accelerating for the first time this year to 2.9% on an annual basis. Concerns about a ballooning U.S. budget deficit and demand for long-end bonds have caused the yield on 30-year treasuries to spike in recent weeks. A downgrade of U.S. sovereign debt by Moody's Ratings last month has prompted Hong Kong pension fund managers to form a preliminary plan to sell down their holdings if the U.S. loses its last recognized top credit rating. Meanwhile, Tuesday's thinly detailed outcome of the Trump administration's trade talks with China in London left traders and investors underwhelmed. Markets were watching whether the world's top two economies could damp down tensions that economists say have tipped the global economy into a downturn. After some 20 hours of negotiations, U.S. officials said both sides had established a framework to revive the flow of sensitive goods, even though the plan still needs sign-off from Trump and Xi Jinping. A preliminary agreement doesn't fill me with enthusiasm in terms of this being resolved, Guy Miller, chief market strategist at Zurich Insurance Company, told Bloomberg TV. This is going to continue to be pushed down the line. Corporate highlights: Abu Dhabi's main oil company is evaluating whether it can buy some of BP plc's key assets should the embattled British firm decide to break itself up or come under pressure to divest more units. According to people familiar with the matter, UniCredit SpA will pull the takeover bid for Banco BPM SpA if the Italian government doesn't clarify the conditions imposed on the deal. Chief Executive Officer Andrea Orcel said. Inditex SA reported a muted start to the second quarter and warned that foreign exchange fluctuations could have a greater impact on results this year than anticipated. The shares tumbled. Nvidia Corp announced a raft of projects aimed at bolstering artificial intelligence infrastructure across Europe, including an expanded partnership with French startup Mistral AI. A consortium led by KKR and Company raised its bid in a takeover battle for Assura plc, valuing the UK healthcare landlord at £1.7 billion, $2.3 billion. Vietjet Aviation JSC is in talks to order about 100 additional Airbus SE narrowbody jets. Bloomberg News has reported Nintendo company sold 3.5 million plus units of the Switch 2 in just 4 days, a record-breaking start for the company's first new console in 8 years. Top overnight news: trade, tariffs. U.S.-China officials agree on framework to restore trade truce and lift China's rare earth export restrictions. Link Axios NYT Bloomberg. U.S. Federal Appeals Court ruling lets tariffs remain in effect. Axios Bloomberg Reuters. Link Chinese exporters selling at a loss to retain U.S. clients amid rising tariffs, deepening economic pain. Reuters. U.S. and Mexico reportedly nearing deal to reduce steel tariff and cap import volumes. Bloomberg. EU anticipates U.S. trade negotiations may extend beyond Trump's 9-joule deadline despite recent progress. Bloomberg, Washington, Elon Musk expresses regret for criticizing Trump, while Trump shows no interest in mending their relationship. NYT Bloomberg. Senate Republicans downplay changes to Medicare and reconciliation bill. Politico. Senate Republicans finalizing scaled-down food stamps. Cuts in move that may offer some political cushion but save less money. Politico. Senate Republicans aim to fulfill Trump's tax promises, including exemptions for tips, overtime, and loans. Bloomberg. White House shared polling data with Senate Republicans, highlighting popular bill elements and guiding sales strategies. Axios. Some GOP lawmakers urge Trump administration to reconsider aggressive deportation policies amid emerging differences. Axios. Trump allies view LA protests as chance to push for military force mass deportations. Axios. More cities seen protesting. Reuters. HS Secretary RFK Jr. plans to appoint qualified physicians to Vaccine Advisory Committee after dismissing current staff. Bloomberg. Corporate Meta Zuckerberg invests $14 billion in Scale AI, hiring co-founder Alexander Wang to enhance AI efforts. CNBC, NYT, Axios. Apple executives say revamping Siri and integrating OpenAI technology in iOS 26 for enhanced AI capabilities beyond chatbots. Link. OpenAI plans to tap Google Cloud Service to address need for computing capacity. Reuters. Tesla promotes video of robo-taxi driving in Austin, hinting launch is near. Bloomberg. Starbucks CEO Nickel reports significant interest in selling a stake in its China business to boost sales. FT. Starbucks will implement new labor model across North American stores by summer's end. Reuters. Bloomberg. Starbucks testing protein in cold foam to meet rising demand for protein-packed drinks and boost sales. Axios. The GM investing $4 billion to increase U.S. gasoline vehicle production, responding to tariffs and low EV demand. Axios. Warner Bros. Discovery faces challenges amid cable TV struggles, leading to staff frustration ahead of planned split. FT. Moody's downgrades Warner Bros. Discovery's debt to junk status, complicating bondholder discussions over split plans. Bloomberg. Trump's Made in America push has AI data center suppliers flocking to U.S. Nikkei. General Mills considering selling its Haagen-Dazs stores in China due to sales challenges. Bloomberg. Inditex, owner of Zara, reported a slow Q2 start, warning of greater FX impacts. Bloomberg. Marelli Corp, a Nissan supplier, files for Chapter 11 bankruptcy, securing $1.1 billion in financing for restructuring. Reuters. Nintendo has sold over 3.5M Switch, 2 units in 4 days, exceeding market expectations significantly. CNBC. Bloomberg. Central banks. U.S. Treasury Secretary Bessent reportedly in the running for Fed chair, though White House denies. Bloomberg. Markets betting on only one Fed rate cut in 2025 amid signs of resilient growth, sticky inflation. Bloomberg. Survey suggests economists see Fed holding in June, with next cut unlikely until September. Reuters. Majority of economists predict slower BOJ JGB purchase, tapering next year. Bloomberg. Hold off on rate hikes this year. Reuters. ECB's Lagarde says trade barriers threaten global prosperity, policy reforms needed. Reuters. ECB's Kazakh suggests further interest rate cuts may be needed to maintain 2% inflation amid economic uncertainty. Bloomberg. ECB predicts Eurozone wage growth will slow to 1.7% in Q4 2025, indicating controlled inflation. Bloomberg. Economy. U.S. inflation forecast to have picked up in May, reflecting modest tariff pass-through for imported goods prices. Bloomberg. Immigration crackdown may be starting to show up in labor market. Link. Japan wholesale inflation slows by more than expected amid drop in price of raw material imports. Reuters. Geopolitics. The U.S.-Russia talks will shift to Moscow, with Kremlin official noting slow recovery in bilateral relations due to U.S. opposition. Reuters. EU unveils latest sanctions package targeting Russian energy, banks, and Nord Stream. Politico, but faces opposition. FT. There's more, and we're so early. S&P futures, they're up by 0.4 Wednesday morning, trading near the best levels after a cooler May CPI print comes after U.S. equities finished higher on Tuesday, leaving the S&P less than 2% below its February record close. Most shorted names continue to outperform, while select big tech, energy, chemicals, builder, pharma, and transports also fared well. Treasuries firmer off earlier weakness, with yields down 6 to 7 basis points on the short end of the curve. Dollar is off by 0.1, gold is up by 1, Bitcoin down by 0.5, and WTI is up by 1.7. Trump's skepticism about Iran's willingness to end all uranium enrichment. Trade dominating the headlines again, though nothing to really shift the narrative. U.S. and China agreed to a framework for implementing last month's de-escalation in Geneva. As widely previewed, two sides also agreed to dial back select export restrictions. Details light and deal still requires leader sign-off, though Trump touted excellent relationship and said Chinese students welcome in U.S. universities. U.S. and Mexico reportedly near deal that would exempt Mexican steel from 50% tariff up to a certain limit. U.S. Court of Appeals ruled that Trump's IEEPA tariffs can stay in place for at least a couple more months as appeals process plays out. Outside of trade, market boosted by fellow consensus May CPI reading, with release confirming expectations of a cooler print. Treasury market, another area of focus. Supply shifts to the back of the curve with today's 10-year note auction and tomorrow's 30-year bond sale. May headline CPI is up by 0.1 month over month, below the 0.2 forecast, 2.4 year over year, and core is only up by 0.1 against expectations of 0.3 and April's 0.2 rise. Release noted lower prices from airline fares, new and used cars, apparel, and then more Treasury supply today. In Washington, Treasury Besant scheduled to appear before the House and Ways Means Committee at 10 a.m. Looking ahead, PPI claims out on Thursday, though the biggest event seems to be the $22 billion auction of 30-year bonds. Preliminary University of Michigan consumer sentiment and inflation on June cap off the week on Friday. Apple executives defended company's AI strategy and decision to rebuild Siri from the ground up. Tesla CEO Musk said he regrets some of his online attacks against Trump last week. USAF reportedly have requests to Congress's F-35s for LMT. Starbucks CEO said company has received a lot of interest in sale of minority stake in China business. GIS reportedly considering sale of Haagen-Dazs in China. GME mixed revenue light but EBITDA and EPS better, while stock nearly 10% in the last month to print. GTLB down on big of underwhelming revenue beat, no full year guidance raise, though CRPO and bookings strong and macro commentary fairly positive. Oh, excuse me. Play Q1. Comps declined more than expected, though takeaways talked up sequential improvement and traction behind turnaround initiatives. AMSC down on secondary announcement. SSTK and Getty higher after securing stockholder approval for a proposed merger. And Stitch Fix boosted by return to positive year-over-year growth. Chadadonia. Wow, good morning. So yeah, that's all the news. Again, you're still writing. Not too many new developments from yesterday, but again, you got updates on trade and all of that. So we'll see where it takes us. But we got some pre-market movers here this AM. Okay. Where is it? So Sale, they're up by 10% off earnings. 10.9 TLN is up by 8.1. PPA with Amazon. INSM is up by 2.6. Tesla is up by 2.3. Tentative 22 June launch date for robotaxis. RKLB is up by 1.8. Grab is up 1.70. Coupon convertible note for $1.5 billion. FSLR up 1.3. Jeffries upgrade. P-Lab up 2.1. Craig Halliam initiates buy. Oklo is up 1.5. Notice of intent to award by Defense Logistic Agency. Vaxart is up 63. Conference call at 8:30 to discuss top-line results from phase 1 trial. Oust is up by 15. OS1 digital LiDAR has been vetted and approved by Department of Defense. That's good. Stitch Fix up 14.8 off earnings. XNet 8.9. Arashi Vision completes IPO on Shanghai market. SSTK is up by 6.2. Shareholders approve merger with Getty. Play is up 5.6 off earnings. EOLS 3.9 insider buy. Quantum names higher as NVIDIA CEO reiterates that quantum computing is at an inflection point. Trading lower. Chewy is down 6.7 off earnings. Tencent down 5.8. GameStop down 4.6 off earnings. LMT down 2. Air Force cuts in half. Request to Congress for LMT F-35s. Summit down 2.1. Leerink initiates underperform. BRO down 2.0. 39 million offering. Nibis down 1.5, ETN down 1.2, HIMS down 1.2, ANET down 1.2, BMP downgrade, AMSC down 17 to offer common stock of indeterminate amount, GitLab down 13 off earnings, Run down 5, Jeffries downgrade, IREN down 4.7, 450 million convertible note offering, Etsy down 3.7 already downgrade, GGAL down 280, 11 million offering. ARAI down 13 after stock went 63% yesterday. TPST down 13.2, registered direct offering. CABA down 13, new data from phase 2 trial. KLTO down 11.9, amends public warrant to provide one-time repricing of exercise price. FUFU down 7.9, common stock agreement. And select metal and mining stocks trading lower. FUFU! FUFU, do you love me? Are you grinding? Say I'll never ever sell my long term unless I buy me a property, and I won't break all the rules because they are written down for the last 5 years. And I no, okay. I'm just feeling it, bro. What do you want me to do? What do you want me to do? So Chattadonia, that's it, man. That's it. We got it all. We have 15 more minutes. We've gone over the headlines. We've gone over the news. I do have a couple of plays. I think, should we just move on over and then I'll tell everybody? I might as well. But yeah, I think it'll be a pretty simple day. So before we do any of that, before we make our early move, man. Oh yeah. And dude, like, this is what I'm saying, bro. I'm going to unfortunately bring up drama. Okay. But every day, bro, for real. And I love you, veterans. Thank you. And I hope none of you, man, don't ever dude, this is real. Okay. Do you not understand? You think I would show up every morning and be honoring the veterans every day if I didn't really believe this? What's wrong with you? Come on, bro. All my young guys, you better show this in real life, for real. Don't tell me you respect money and you respect it, and then you can't even show it. One of my favorite Bible verses, it says, if you can't love your brother who you see, how can you love something you can't see? So, people tell me a lot of things, man, but our troops, we got to honor them every day, man. And that's why big shout out to my veterans. Thank you guys for everything. And you are the focus, because I heard yesterday, Gavin Newsom, he was talking smack about Trump, and he said it was a shameful display for the parade, because he's pretty much saying the America parade is on the same day as Trump's birthday. And Trump is making them do it. So, yeah, here's the deal. Are you ready? The veterans are more important. I don't know if y'all get this, because they're like, no, he's talking about his birthday. I don't care about Trump, bro. I care about the veterans. And I think that we should honor them. And the veterans, if they want to be a part of it, let them be a part of it. If we should have a day to shout out our Veterans Day, I think we should do it every single day. So when it's all said and done, thank you guys, for real. And regardless, if anybody has lived in a world where you guys, seriously, people talk down on veterans, people act like it's nothing, people ignore it. So for real, man, God bless all of you, because if anybody has seen the battle on many fronts, it has been you guys and your families, and all of you have made the sacrifice day in, day out, and we all just enjoy it, bro, and act like nothing happened. Oh, yeah, so thank you, for real, and God bless every single one of you, and big shout out to anybody else out there giving back to their local communities, doctors, nurses, teachers, firefighters, police officers, the janitors, the coaches, the garbage men, even the people out there, bro. You know what I saw? I saw people during the protest, and I saw buildings about to get raided, and God bless, because there was a few beautiful souls, man, who during the protest, even though they were there, they prevented other people from looting and doing that. And y'all deserve a shout out, bro. Again, all of y'all holding down your communities. You can protest. You could stand up against something. And that's why I'm saying, bro, the ones who do it with such grace and protection of others, God bless all of you, man. So big shout out to all of you. But ladies and gentlemen, please rise up. Place your right hand over your heart. Say it with me. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all, baby. Oh, it's game time, baby. Oh, nah, let's go. Oh, yeah. Oh, and then Netflix, Peters says will respond to Trump's 100% tariff on foreign movies if specific proposal arises, but nothing material yet. Wow. Well, look at that. So, Chattadonia, are you ready? Are you ready? Tudor Jones balancing major tax. So I have something, because some Democrat yesterday, he put out a pretty decent bill, and like he called on Democrats to like highlight how they would do it. So I respected it. I went over it, and like I liked half of it. Long story short, the other half is just bullshit. But we'll go over that today. I have a couple of things to show you, and just don't forget. Remember that tax bill, you guys, or the spending bill. That is your most important thing right now. So get ready for that. And now, baby, let's move on over to Gen Pop. Pay attention to the plays when we get to Gen Pop, okay? I have one in there for you. But you gotta, and then you gotta listen. I don't know if you watch the watch list or not. That's on you, bro. Trump is a loyalty and growth guy. Besant fits for Fed chair. They are really trying to pump that one. But China. I'll see you there, baby. God bless you. God bless America. Be safe out there. Peace. Thank you.